Hello, students, and a warm welcome to this new lesson series on the chapter Accounts from Incomplete Records. Till now, we have studied all about the double entry system of bookkeeping. However, students, did it ever strike you that in actual practice, all entities or firms cannot or do not maintain accounting records as strictly as the double entry system? Many small sized enterprises, like the small sized grocery shop of your locality or the small sized courier agency near your chalk, and many such other entities, maintain accounting records not as per the double entry system. Such records are termed as incomplete records and also popularly known as single entry system. But please note carefully that single entry system is a misnomer, as there is no such specified system of maintaining account records. In this method, the word incomplete is very important. Some transactions are recorded with proper debits and credits here, whereas in other cases, either one side or absolutely no entry is made. Let's understand the basic features of incomplete records to understand this system better. 1. This is an unsystematic and unorganized way of maintaining records. 2. Usually records for personal accounts of debtors, creditors, and cash are maintained following the double entry system. 3. The information relating to assets, liabilities, expenses, and revenues is partially recorded. 4. Personal transaction of owners are seen to be recorded in the cash book. 5. The source documents here are the original vouchers such as sales invoice, purchase invoice, etc., which directly helps in ascertaining the profit or loss account. 6. Different organizations maintain different records as per their convenience under incomplete record keeping, so there is no possibility of standardization of such record keeping. This also prohibits comparison of the records across different entities. 7. The profit and loss under this system of accounting cannot be ascertained with a high degree of accuracy. The balance sheet also does not reflect the true position of assets and liabilities. Now we have to understand the reason as to why some entities maintain incomplete records. 1. This system is followed in situations where the bookkeeper does not have proper knowledge of accounting principles. 2. The cost associated with maintaining such records is the bare minimum. You require only simple record keeper rather than specialized accountant. 3. The time to keep such records is the minimum. 4. Transactions which seems to be important and convenient to record are captured here. Now this will make you understand why does the grocery shop in your locality maintain incomplete records. Now understandably, this type of record keeping comes with a number of limitations. Let's understand the major limitations. 1. Trial balance cannot be prepared. 2. There is no assurance of accuracy of accounts. 3. This form of record keeping does not give any chance of ascertainment and evaluation of financial results. 4. Anything related to profitability, liquidity, and solvency is not understandable here. So naturally, fundraising and business activities are not possible in such arrangements. 5. There remains a serious challenge in case of recovery of insurance claim with an insurance company, in case of loss of inventory by fire or theft. However, even though incomplete bookkeeping is not the ideal situations, every entity using such record-keeping method wishes to ascertain the results of its operations. So like any other business entity, we need to derive the 1. Profit or loss of the entity. 2. The amount of assets and liabilities as on the closing date of the accounting period. Now there are two popular ways of determining the same. 1. Preparing the statement of affairs as at the beginning of the accounting period and also as at the end of the accounting period. This is called the statement of affairs or the net worth method. 2. The accounting records are put in to proper method first, and then the trading and profit and loss account and the balance sheet are prepared. This method is called the conversion method. Now, we will learn these two methods. First, let's start with the statement of affairs. This statement shows the assets on one side and the liability on the other side, just like the balance sheet. The difference between the two sides gives the capital amount. This statement resembles the balance sheet. However, this is not exactly a balance sheet. This is because this statement is not based on the exhaustive set of ledger balances. Fixed assets, outstanding expenses, bank balances, etc., are determined from relevant documents and physical count. Two such statements are prepared, one at the opening date and the other at the closing date. Now, the difference between the opening and the closing capital represents the increase or decrease which needs to be adjusted with fresh capital introduced or drawings to arrive at the amount of profit or loss. So profit or loss is equal to capital as on closing date minus capital as on the beginning date plus drawings during the year minus capital introduced during the year. A positive balance indicates a profit, whereas a negative balance indicates a loss. Take this example and calculate the profit made by Sheba in her grocery store. As on 1st of April 2020, these are the assets and liabilities. As on 31st of March 2021, these are the assets and liabilities. During the year 2021, Sheba introduces capital of rupees 20,000 and she withdraws rupees 40,000. So now, let's see the statement of affairs as drawn here. We plot the assets and liabilities on the respective sides and we get the capital as the balancing figure as on the opening and closing date. Now, we draw the statement of profit and loss and derive the profit by applying the same formula we just discussed. Well, students, with this, we have to close this part of the lesson video. See you soon in the next video lesson. Till then, happy learning!